ABB. That's been piling on more gains. It's up almost 11%. And the big question the street is asking there is about the sustainability on the margin front. Let's take it across to the conversation my colleague Somit had with the management, Mr. Sanjeev Sharma, the country head as well as the managing director of ABB, as well TK Sridhar, Chief Financial Officer, were just speaking with him.
Well, ABB India reported a stellar quarter in the first quarter of calendar year 2024. The stock hit an intraday high after its profit beat analyst estimates by as much as 49%. To give more details on the factors that led to the stellar performance in the first quarter, we are joined by Sanjeev Sharma, the country head and managing director, and TK Sridhar, the chief financial officer of ABB India. So, sir, firstly, to start off with, in the first quarter, your margins shot up to nearly 18%. Now, this was because of execution of orders that had come in when the raw material prices were higher, and currently we had seen a decline in the raw material prices. But how much of this increase in margins that we have seen is sustainable going forward?
I take this question. Thank you for this question. I think if you look at today's the profitability of ABB in India for the Q124 results, is definitely the mix of orders, which is orders which have been booked and executed, booked at the time when the material costs were high, and we got a premium for that. And that's something which the material costs have now softened, so we are enjoying those benefits, number one. And number two is, there was a huge element of service business which was executed in the Q1, especially the process automation segment. And that's something which also gave us a good bit of a profitability expansion in the Q1. And apart from that, needless to say that this is the first time which we crossed 3,000 crores in a quarter as a revenue. And that gave us an immense leverage on the capacity, which really helped us to post this particular profitability. Now, coming to your question, is this something which is sustainable? Is actually, we are today riding on a backlog of 8,500 crores, which is almost 28% higher Y on Y. Right? And I think this has a good mix of orders, both projects as well as products. And we still have a book and bill, which will come up during the balance quarters to come. So I think it also depends on what's the material cost which behave in the future, and also how the market prices in the coming quarters behave. So according to me, right, what could really drive the profitability is a good mix of orders and an execution pattern which will follow in the next 2 to 3 quarters to come.
Okay, so suppose we assume that the raw material prices remain at current level, then is the margin 18% sustainable at least for the next couple of quarters?
I think as I told you, the order backlog which is there has a good share of projects businesses and some system businesses which will have his profitability very well set out, because that's an order which is not book and bill. And the book and bill orders, which is normally 40 to 50% of our every quarter's revenues, depend on the market prices prevailing at that point of time. So I think, to my mind, it will get adjusted going forward and get calibrated to the current material cost conditions, what is there in the market.
So can we say this, that though margins might not sustain at 18% level, but the company would always aim to have a margin above the 2023 level of 14.3 odd percent? Is that the correct way to look at it?
Let me put it this way. I think last year we declared 12% as a profit after tax, and our aim is to be better than that, or at least be there at those levels, overcome what may.
Okay. Now, if you look at your order inflow, that was around 15% higher, both on sequential and on YOY basis in the first quarter. But in Q2, are you seeing signs of going forward? Are you expecting some slowdown owing to elections, and post-election, are you expecting a further pickup in order inflows to come in?
Would you like to take it?
Yes, typically, I think this is a question around elections. But in this particular election, we don't see a significant impact coming. There are some pockets wherein you will always have short cycle orders which get adjusted. But otherwise, on the broader frame, we see that the investments being made by the industries, infrastructure companies, as well as the orders being placed by the government, especially for railways and metros for us, I think we don't see any slowdown there.
Okay, so the strong momentum that ABB is talking about in here, is it specifically for the entire sector, or specifically for ABB, given that you're gaining market share from your peers?
Well, last 3 years, if you see 2021 to now performance, we have grown 27% CAGR on the orders. and also our margins have expanded about 700 basis points. So that shows that we are able to engage with the market and the multiple market segments which are of interest to us, and we are able to extract growth there. So I believe it is a mix of India story, wherein India is growing. Number two, market is much more broad-based compared to past. We participate in 23 market segments, and we are seeing robust growth in multiple market segments. And also, we have increased penetration in geographies wherein we were not present before. And plus, on top of it, we have expansion of our product portfolio. That means more products and services are being offered to the market. Plus, on top of it, we do the localization, which continue to make our products more competitive in Indian market. So a combination effect that is playing out, and not to mention post-COVID, there is a much more kind of a reliability aspect which has come into the mind of the customers. So companies like ABB, which really stood by all the customers during the COVID period, we supported them. There's a much more reliability factor also playing out in the market in terms of trusting what we can do for the customers.
So based on the above mentioned factors, can we confidently say that 15% growth that you achieved in first quarter is easily sustainable throughout the calendar year?
What we always look at is how the market formation is ahead of us. So that's what we focus on. We don't give any forward guidance. And what we look at is how the market formation is, all the segments which are interested to us, and also how the geographical spread is taking place. So there, I think we have a good market formation, good project pipelines, and we will continue to engage with them, and you will get to see how we perform quarter to quarter going forward.
I think just to add to what Sanjeev was mentioning, Sumit, so if you look at it, today 92% of our business comes from India. So therefore, any economic activity which spurs the environment in India would definitely also come our way. So we believe that it's also important that the government capex and the private capex also play out a role in this growth journey.
Okay. And segment-wise, if you could just give us some information on from which segments are you seeing this large order inflow coming in?
Well, we have three categories of market segment wherein we call them focus, enhance, and sustain. So focus segments are, for example, are the ones which are growing 15% plus in the marketplace. So namely, it can be data centers, railways and metro, and electronics manufacturing. So that's where we are seeing large gains for us, more accelerated volumes for us. Enhance are the segment wherein the market segments are growing between 8 to 15%. And there are multiple market segments there, be it renewables, automotive, warehouse and logistics, water and wastewater, buildings and infrastructure, power distribution, food and beverage. And then there are classic large industry market segments, be it marine and ports, rubber and plastic, metals, mining, oil and gas. They are sub 10% growth, but many of those large market segments are now joining in their capex journey, and that is something which has to play out as we go forward.